Today is Monday, August 19th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Mark Soderberg started with the grain markets this morning. And let's talk weather. With summer nearing an end, how is the weather looking as we wind down the 2024 corn and soybean crop cycles?
Well, the outlook for this week is dry with little to no rain across much of the nation's midsection. Despite the lack of rain, however, crops are not expected to experience a high level of stress, at least initially, as temperatures look to remain seasonally mild across the heart of the Midwest. Drought ratings are extremely low, while heat is expected to be limited to the deep south and the far western corn belt for much of this week. By next weekend, however, the above normal temperatures are expected to expand over the heart of the Midwest, bringing several readings in the low to mid 90s. While this will likely not have a big impact on corn yields, it certainly could negatively impact soybeans as they continue to set and fill out pods. Historically, it's not unusual to see soybean yields drop after the August USDA report. In fact, they've fallen over 2 bushels an acre in 2 out of the last 4 years. So weather still matters this late in the growing season, particularly for soybeans. And with August weather finishing up drier than usual, it's important that we do see another widespread rain event here by early to middle part of September to help maintain optimal yield potential. So we'll have to continue to keep an eye on this as we move forward.
Mark, how about an update as to how the speculative traders are positioned in the ag markets currently?
Yeah, speculative traders, they just remain heavily short in the ag space. Friday's CFTC report showed that money managers were short nearly 620,000 contracts across the grains, soybean complex, and livestock. And that's the second largest cumulative short position ever reported. They're pretty much flat in soybean meal, along a little bit of live cattle, and in short everywhere else. Index funds, they've also been steady sellers now in the ag space for the past 3 months. They've been net sellers in 12 out of the last 13 weeks, reducing their long holdings in the ag space now to the smallest since October of 2012. Index funds are often used by asset managers as a hedge against inflation, and with inflation readings declining, and now the Federal Reserve apparently ready to embark on a number of interest rate cuts, it appears these long-only index funds are really kind of falling out of favor as an asset class.
And on Friday, Federal Reserve Chairman Powell will speak at the Jackson Hole Fed Symposium. What do you suppose he'll say?
Okay, well, first of all, just a little history on the symposium. This started in 1982 when officials from the Federal Reserve Bank of Kansas City picked the location. So his speech on Friday will take place at 9 o'clock Central Time, and it is widely expected that Powell will use this opportunity to greenlight a 25 basis point cut in the Fed funds rate at the upcoming meeting on September 18th. Most likely, Powell will say that monetary policy going forward will be guided by economic data before the next meeting. He made it clear that the idea of doing something larger than a 25 basis point cut was possible, but not likely. So he's basically hinting very strongly at a 25 basis point cut. And in his words, he said, we think if we do get the data that we hope to get, then a reduction in our policy rate could be on the table at the September meeting. So a very clear signal, a rate cut is coming. And I am also on board with a 25 basis point reduction, but I also think that there will be subsequent rate cuts as well. Right now, financial futures markets predicting anywhere between 90 to 100 basis points in total cuts before the end of the year.
And Alan, what are other major economic reports will traders be watching this week?
Okay, on Wednesday, we'll have the FOMC minutes to be released from the July 31st FOMC meeting. Thursday, the PMI composite, but by far the most important dominating event is Friday's Powell speaking at the Jackson Symposium.
Thank you. Mark Bowman, let's talk about a couple of the commodity markets. First, natural gas. Is there an argument for a low in this market?
Well, I think there is. Let's start with rigs in operation. They were up last week to 98, but this is down from 117 a year ago and 121 as recently as February. It seems that low prices, and we're down from a high of 364.80 in November and 325.40 in June, and it seems like these lower prices have lowered the incentive to produce. The bearishness of this market over the last several months has been based on ample U.S. supply. U.S. gasoline gas stocks storage is currently about 6.5% above a year ago and 13% ahead of the 5-year average. But this surplus has been narrowing week after week. In March, we were 24% higher than a year ago. And every week has seen a somewhat narrowing. And it actually fell last week. This is the first time this has happened during the April through November timeframe in at least 5 years. This is normally the build season. The rate of the build usually declines during the summer cooling season, but it tends not to go negative as it did last week. We do expect the build rates to pick up again as we move into the shoulder season, but this lower rig count may limit the size of the build. The only thing as a caution is that short-term momentum indicators are a bit overbought.
Lastly, Mark, the cocoa was so volatile early in the year. What will it take now to get cocoa to break out of its current range?
So, cocoa market is balanced right now by a tight global supply situation after last year's disastrous crops. That against optimism about the upcoming main crop, which will be started harvesting next month. The crop year officially begins on October 1st. So far this summer, Ivory Coast farmers have been reporting good growing conditions, much better than last summer, when too much rain and not enough sunshine caused problems with black pod disease and swollen shoot disease. It's been a bit dry recently, but the rains are expected to return into next week. There are still some concerns about Ghana and how well they're doing in their fight against swollen shoot disease. Like I said, Ivory Coast could start harvesting next month, and any reports of a strong harvest could put some pressure on the market. The International Cocoa Organization will release its quarterly update on the world supply demands for 23-24 late this month. And any adjustments lower or higher could also spark some excitement. The last report called for a global supply deficit of 439,000 tons, and that would be the third straight year of declines. They won't release any update on next year or this current season until next spring.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests. It should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.